So over the last month, my portfolio has gone up 8.7%, and the S&P 500 has stayed around zero. And I feel like that's so important to say because a lot of people will say, hey, my portfolio's shot up 12% or 15%, and but they will leave out the fact that the S&P 500 went up 20. It's like, okay, so you're performing under the average market. So S&P 500 has stayed at around zero um, over the last month, and mine has gone up almost 9%. So outperforming the market. And I said the last month because I started putting money into the market, moved it out of my high yield savings account into the market like 5 weeks ago or something like that. I was just stockpiling cash for a while first. And I say all this because I want to share with you the principles that I'm using to invest to make this happen. I'm not going to share specific stocks to pick or what I picked and that you should go do them too, because that's not going to serve you. If you understand the principles that I use to make decisions, then that will. And so, number one, understanding what a stock is. And this is important, even if you're like, I want to stress, even if you're not trying to be a trader, I'm not a trader. I invest. That's it. I don't try to buy stuff when it's low in the morning and then sell it when it's high later that day and keep doing that all day. That is not for me. Um, and so, first things first is understanding what a stock is in the first place. So when you buy a stock, you're buying a little individual slice of a company. You're buying a little bit of ownership in a company. And you're not buying it, you're investing in it. Like the company is getting those funds so that they can work with those funds and make the company more valuable by either purchasing other assets that are going to lead to profit and revenue in the future, or just making profit and revenue right now, with that money that you invest into it. Um, and it's the most passive form of passive income is investing in other companies, because there's always going to have to be somebody that does something um, to make money. There's no such thing as like money being made and nobody doing anything. But when you're the investor, you give somebody else the money, and them and their team, i.e., the companies, do things with that, and you get to sit back. And when the company grows, becomes more valuable, your little slice of it that you own becomes more valuable too. And just to be clear, you don't actually make any money until you decide to sell that little slice of the company that you own. But anyway, so that's the first thing, is understanding that this is what you're actually doing when you're investing in stocks. The price of a stock goes up because a company is more valuable. So that's what we're looking for. We're predicting which companies we think are going to be more valuable in the future. And when you take this approach, and like, instead of, do I think the stock's going to go up or go down because of what Trump says, or because of a tariff, or because of this or that, it's like, well, all those things are like challenges for the company. But if you think that they're still going to be valuable, more valuable in the future than they are right now, then chances are it might be something that's a good investment, unless it's totally overvalued right now. And so we have to understand what a stock is in the first place. And then this is what I do. I look at the company, I look at, okay, what's their mission statement? What are they trying to achieve? And you can Google all of this stuff. Like, honestly, the best place to look at this is not by reading articles that other people wrote. It's not by like looking at different brokerage accounts and articles that they put out about these things, because they have an incentive. Like, brokerage accounts want you to buy stocks through them because they get paid when you do. So like, I don't listen to any of them. I look at Yahoo Finance, the best place. Yahoo Finance has a ton of articles, yes, but they also show all of the SEC filings. So that means you could look at companies' balance sheets. The best thing that you can do is learn how to read a financial statement. I learned this from accounting class, but there's a ton of YouTube videos that will just show you how to read a financial statement. Be able to look at a statement of cash flows and know what's going on with the company's cash. Be able to look at their balance sheet, and so the financial statements, it shows what's going on operationally in the company. Like, okay, what's their sales, what's their revenue, what are their expenses, what's their net income. Um, that's what you're gonna see on uh, their financial statements, on their income sheet specifically. But if you look at their statement of cash flows, you can see how cash is moving in and out and around the company. If you're looking at their balance sheet, you can see, okay, what assets do they have? Like, what things does the company own that's going to help it produce revenue in the future? Also, what debt does the company have? How much debt is it taking on? How much loans? How much liability is this company owing? Is it accruing more debt over the last 2 years? Has it gotten more debt? Okay, why did it get more debt? Then we look at, well, it purchased these assets. If you would have looked at Amazon's balance sheet back in 1998 or 1999, you'd be like, whoa, this company is way underwater. It's in a ton of debt. I'm not going to invest in this. But if you also looked at what it was buying with those, and you read the letters to shareholders that Bezos was putting out, you'd be like, oh, well, they're actually buying a bunch of assets that help build their distribution system so that they don't have to pay UPS or FedEx to ship their products. This is going to make the company way more valuable in the future. Maybe this is a good investment, even though the stock price is total crap right now and people don't believe in this. If you see the vision that the company, that's why it's important to look at their mission statement. Look at, like, what's the vision that they're trying to achieve. Okay, what's their balance sheet look like? How far along are they on this process to achieving it? And if it looks like something that's going to, like, really maybe take some time to build, because all great things do, but you see that they're on track to building it, might be a good place to park your money. And this is important even if you don't want to be like an investor, because you could allocate like your Roth IRA or your retirement to different companies that you look at like this. And the important thing is, when we're doing this, when I do this, the important thing is to not get caught up in the stock going down short term, because things are going to happen in the market that are going to make it go down short term. But what I'm looking at is it on track to this 10, 15, 20-year goal? I'll tell you specifically right now, this is not financial advice, but one of the companies that I'm super bullish on, I'm kind of speculating on this. I don't put all my eggs in this basket, but I think that from what I see, it looks like it's going to be good. Is SPCE? That's Virgin Galactic. If you don't know what they do, um, they are basically building, it's space tourism. Just like how Katy Perry went up to space in a Blue Origin thing for like 2 minutes. Everybody knows about that, right? Because it went viral. So Blue Origin's goal is to make space tourism widely available, for anybody who wants to do that. Like, you pay a ticket, you go to space. And and the thing with them is, I think the stock is like at a couple bucks right now. It's like $3 or something. But just in 2021, their stock was like $1,000. And this just goes to show, it doesn't matter what the price of the stock is. The stock was $1,000 because they um, they had built their first spacecraft and they flew it and tested it, and the test was a success. They were only building their first one, and then as soon as that happened, it was like boom, their stock was $1,000 a share, and then but then they sold more shares of stock. They released another round of stock to share because they needed more. They needed more money because now they're starting to build their fleet. And once that happened, investors were like, "Oh, like all of a sudden the stock is devalued because they basically took this pie of the company and made more slices of pie out of it and divvied that out to more people." So the people who already own stock, their slices got smaller, became less valuable. And so then investors didn't like it, and now the stock is down to like $3. Um, but they don't plan on having their next test flight until summer of 2026. So it's like they're just building and doing things right now. It takes time to build a fleet of spacecraft, you know? And so I don't have a ton of money in there, but I have like probably like 70 shares or something like that. And it'd be really cool to see over 20 years. Of course, I'll have to just keep track of this stuff, right? Keep looking at their balance statements, looking at their income sheets, seeing what they're doing, seeing if the company's trending up or trending down. Um, if it looks like it keeps going up, cool. Just let it sit there. It'd be really cool if that gets to $1,000 a share again. And once they're operating, they're not making any income because they're not operating yet. Uh, but so that's more speculation that I put in there. But what you want to do is you want to look at like how a company's operating, understand how it's operating, and then if it looks like it's going to be good in the future, then put your money in there, and don't put all of it in there. Put like 5% of what you're investing in a company. Like look for 10 good companies. That means you're probably going to have to look at the balance sheets of around 100. Like look at 100 different. If you look at 10, you're going to find one that looks like it might be good, and then look at 10 more, and then find one that you think might be good. Then look at 10 more and find one that you think might be good. And the whole point of this is not to put your money in to sell it right away. This is just how I think. When I do this, I'm doing this because I'm like, okay, this company looks like it's going to be valuable over the next 20 years. So let's put the money in there and let the company take that money and do what they're doing with it, so that way my ownership of it increases. When I do this, I don't have to care about the economic news. I don't have to be glued to my Robinhood account, seeing if stocks are going up or going down, and if I should sell it right now, or because it's like I'm waiting 20 years, So who cares what's going on in the short term, day to day? The only way, the other thing to really focus on, that I focus on, is that the only way to lose money, there's only one way to lose money. I actually heard this from uh what's his name? Peter Lynch, Vanguard. The only way to lose money is you buy a stock, the stock price goes down, and then you sell it. And then you sell it. You can buy a stock and the stock price goes down, you still didn't lose money. The value of the asset that you own has dropped, but it can still go back up. You lose money when you sell it, or if it goes down to zero. It goes down to zero because the company goes bankrupt and disappears. So if the company's not going bankrupt, uh, like don't sell it unless you can see from the financial statements that like, hey, they're in big trouble and they're going bankrupt, so I might as well just sell it now and get out and get some money to recoup, right? Um, and hopefully, if you follow what I've been sharing in this video, you don't invest in any companies that end up going bankrupt. Um, because you're actually doing your own due diligence instead of just trusting what other advisors and other people are saying. Other people whose job is to sell you something. Like, I just don't trust what they're saying. I just do the research myself. If you don't know how to read financial statements, there's plenty of videos on YouTube that will show you how. I'm sure of it. Hope that's helpful for some of you guys.